Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So, although euro currency stands relatively quiet, we still have the positive look on a trading plan that we discussed on the weekend, and actually we started to talk about it even earlier in the end of the previous week when we suggested that probably the pullback is ready here. So, market should show some retracement. The major concern last week was about the shape of this performance, and we said that if market will stay inside of it and starts showing the big retracement back, it will be more in favor of the widening triangle consolidation and possible upward breakout. So for the bearish market, price has to start breaking down, especially because we have the double top pattern on lower time frames, and for now you could see that everything goes with this scenario pretty nice. So for the target we have chosen the area around approximately 107 on average, somewhere between 106.80 and 107 is daily oversold fib level, and also this is the target of the double top. Now let's take a look what we have right here on the 4 time frame chart. You could see that market doesn't show any attempt to return back in the range of the double top, which is good sign. Yesterday it was small, but still step to the downside. And it's market showing this downward continuation. All pullback stands really very tight, so we do not see any significant retracement or something. From that standpoint of view, this is good sign for the bears. That's the target of the double top that we discussed in around 106.90 area, very close to the first fib support of this frosting action. On the hourly chart, there are two moments actually. We have take a look that this downside action takes the shape of the wedge, but as you know, in the modern market, wedge not necessarily means that market should follow in the classic approach. So following the classic strategy. So as you know, the falling wedge by the classic school is more the bullish pattern because it indicates its housing of the bearish pressure, while the rising wedge it's more the bearish pattern. But in the modern markets, very often the wedge is becoming the preparation for further downside acceleration. I'm speaking about downside wedge. We saw many times already, and every time I talk about this, that's this kind of the wedge might be the preliminary steps for some downside breakout and price acceleration down. That might happen. Besides, if we take a look at the other markets, you could see that the chances on the downside continuation are not actually bad. In particular speaking, if you take a look at the 10-year bonds, you could see what's happening. So yes, market still remains in this tight consolidation, but in the recent couple of sessions you can see significant increasing in yield. So it's now 4.34, while just a few days ago it was around 4.15. So this is a significant change in the yields of the 10-year bonds, and it seems so that market is ready to show a bit higher action. On the dollar index, for example, you could see approximately the same performances on the euro. It's not really very fast, but still with the 5 session in a row, market's going higher, and compared to euro, dollar index has the one difference. So if you take a look at the weekly chart, you could see that the recent week right here was a reversal week. So market creates the new lows and close above the top of the previous week, while on the euro currency we do not see it. So existence of the reversal week might be really important. Of course, we are not speaking about erasing the whole frosting action here, but at least it deserves a bit deeper pullback and stronger retracement. So from that standpoint of view, currently I do not see reasons to change our plan or suggest that market could reverse in any moment. In fact, if you're keeping the shorts, you probably could hold them and see what will happen for those of you who would like to take the new positions if you do not have the short position, but you are thinking about it. In the current environment, I would consider this area as a kind of the invalidation for this scenario, because it stands very close to the neckline of the double top pattern. And if market will break it up, that will be a really big test and challenge for the pattern itself. So that's some compromise that you could use, because you can't place stop right now above the top of this pattern. So you need something closer. And that might be, well, more or less a suitable solution for this current task. Besides, it agrees also with the fib level that we have here. Correspondingly, since market is forming the wedge, you could wait for a kind of the maybe ABC retracement or something. Is trying to take position as close to this area as possible to minimize the risk. So that's probably the only thing that you could consider for now, because as I said, overall price performance stands low, but for now I do not see yet the clear signs that the bearish context is failing. So by far everything goes slow, but in a direction that we have set. So that in two words what we have on euro currency. So finally, just to mention Great British Pound, if you take a look at the cable, you see also interesting performance on the top. If you remember, we are considering here major hand shoulders pattern, and take a look on the top of the shoulders. Start happening something. So you can see this market slow down the action, start turning to some consolidation. On the daily chart, it starts reminding a kind of the hand shoulders pattern, but here we have to recall our free drive. So if you remember, we traded this free drive last week, and now you can see that target finally has been completed with this drop. These lows have been taken out, but simultaneously this is bearish reversal swing. And currently, well, here we have some kind of the shape, maybe not the hand and shoulders, but a kind of the rounding top that reminds the potential cup pattern. It's also possible. So overall action here looks choppy, which is definitely not stands in favor of possible direct upward continuation. Here is definitely not the thrusting type of action. And might be also some indirect confirmation that probably retracement could stand for longer. So that's the final thing that I would like to mention here today. Let's keep watching for the euro currency and see what the progress we will get for today and tomorrow sessions.